Bull market or bear market, the trade triangles show you the way. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Friday, the 27th of July. Hard to believe we're coming to the end of July. You know, there are lots of things that are coming out of Europe and economic signals from China, from the United States. So what's an investor to do and to believe in? Well, we have always found that the answer for us rests in our trade triangle technology. Not only will the trade triangles keep you out of non-trendy markets, and I'm talking about the stock market right now, but they'll also get you in when the trend becomes strong. That's where you make your money. So don't worry about the rest of the world, what that's doing. Trust in Market Club's non-emotional trade triangles. Why? Because they work, and they work for you every day. So let's go to a market that's in the news right now, Zynga. And I want to show you how the trade triangles really did capture this move. First of all, you need some history before you can get really involved. The trade triangles really need to have several months of history before you can get really into the rhythm of that market. Now, looking at Zynga, you can see that we had a couple of, I'm just going to leave the monthlies, I'll take the weeklies off, but you can see the last monthly we had was right here on May 1st. And that was $8.14. We're currently trading at $3.10. So you can see we captured this entire move. Now you may remember we use our weeklies for trading as well. And what we did with the weeklies is just simply to use the, and this is how we do with all the stocks if you're an intermediate term trader. So it's this indicator right here. Okay, that's for the trend. This indicator right here is for timing. So the trend is right here, meaning down. So you take a position here at $8.14, going short or just getting out, and you would basically ride this entire move down to where we are. We've had no weekly trade triangles. We've got the weekly trade triangle indicated right here. So the only weekly trade triangle we had was back here, which was saying the market's in trouble. And that was at 12.75. So I think you'll see just how well this works. Now, the question is, am I just showing you a perfect example of the trade triangles? No, I'm not, because there's lots of examples. For example, we'll be looking at Starbucks today, and that shows you just how somehow the trade triangles know and how you can trade with the trade triangles and make money and sleep well at night. So let's just clear the screen and look at our next market. And we'll go back to our portfolio manager and just take a quick look at that. So here we have Facebook, Apple, Zynga. I thought I had Starbucks. Let's just put that on. It's very simple to do. Just click here, and we'll type in Starbucks. You don't even have to know the symbol because we know the symbol for you. So SBucks, click here, and it's right at the very bottom. We can just grab that and push it up towards the top here. There's Starbucks. And you can see it's minus 100. So we know it's a strong downward trend. So let's just click there. And let's just take our weeklies off, of course. And let's scope this in just a little further. So just see in a couple of years, maybe a 1 year or something like that. So, well, here's the 1 year. You can see, well, I'm just going to get my telestrator on here. This is just using the monthlies, of course. So here's the buy point right here, 1. This is way back in September of last year. Catches this whole move up here. And then we have a signal actually 4 days ago to be short this market or out of it totally, and that came at 51.03, currently trading at 46. So it's about a 10% return in the last couple of days. They missed very big on their earnings, and of course this is not a good close if we close down here for the week for Starbucks. But when we take everything off the screen, and remember we talked about this is the trend, and this is the timing. Okay, so let's clear the screen and go to our other indicator, and that's the weekly one. So let's clear the screen off, and we'll just put our weekly trade triangle on right here. And you can see even here we had several buys, and how it works is quite simply this way. when you have the major trend, which is right here, the monthly, that's a positive, meaning the trend should stay in a positive trend for quite some time. Then you have a weekly here, that's a buy. You exit here, so it's a nice profit right there between this point and this point. So that's your profit right there. Then you get back in. You don't go short because the major trend, remember, is positive, a green monthly trade triangle. Here's a weekly trade triangle, means get long again, goes up, you get out here, another nice profit. And then you're out until you buy right here, and then you get out of that position. That would have been a loss, but you would have gone short, or you would be totally out of the market. If you don't like to go short, this is simply an indicator. The monthly a red monthly trade triangle is either a short or an exit. That's exactly what it is. So you'll be out of Starbucks right now and just on the sidelines. So again, the trade triangles preserve your capital and help you capture the moves when they occur. Now, if there's no movement, why be in a stock if there's no movement? So let's just go clear the screen. And before we do that, let's just very quickly just look at this one thing, and that is one-on-one Market Club coaching. Really, what is it, and is it right for you? Well, the question is, how can you benefit from this one-on-one coaching? I think it's a huge benefit to you as a trader. If you're just starting out, or even if you're a seasoned trader, this can help you improve your trading with our trade triangle technology and some other tips and secrets we share with you. But it's a free consultation. All you have to do is give us a call, 877-219-1482, and speak to one of our consultants. They'll be able to help you. So, hey, listen, I don't do too many ads here because I really want to go into the markets. And let's go back to our portfolio, and let's take a look at crude oil. Well, actually, here's a good example. Before we do that, let's look at Facebook. Under a lot of pressure today, new move down. Now remember, we want to see some activity before we get super excited about either buying or selling this market. We haven't had that much activity. If you remember, we sort of came online right around May 18th. So we've had like maybe June, maybe 2 months. We need more data to really value this market in a cohesive way. Otherwise, it's just BS. Really, it really is. So let's see how Facebook works out. Yes, they have a lot of users. Yes, they want to get into mobile. Who knows what the story is going to play out there. But it's interesting. Our panel, we did a survey some time ago with our members, and those members actually nailed this because they said it was going to go down, and that's exactly what has happened. So let's go back to our portfolio and start looking at the markets that we look at. And let's start with crude oil. Crude oil really, and I'm just go quick, we'll just do it 3 months. But crude oil has sort of had the break, coming back up, sort of in sympathy with everything else. But really, you still have this mixed picture. Now, with futures are a little bit different. Now, let me explain to you what futures, how we trade futures using our trade triangle technology. The first key for us is right here. And that's the weekly, and we use that for the trend because futures tend to move a little faster. And right here, we use the daily for timing. Now, we do have a variation on this, and you can, of course, trade the monthly and the monthly for trend and the weekly for timing. It's very possible to do that and do it successfully. Clearly, when this becomes a green or a red, this one becomes a red, then the odds, in my opinion, actually are in your favor. All the markets we cover in our daily report are actually all in what we consider to be a trading range. And they're in a trading range because they're right around this number here. It could be plus 50 or minus 50, all the way up to maybe 70, plus 70, or minus 70. So again, you need to move out of that to get a strong trend going, and we just don't have that in any of the real markets as of right now. So let's see how that plays out. But again, if you looked at this very carefully, you would see that if we put our daily trade triangles in, I'm going to put them right now, and you can see, Well, here's the weekly. You get a buy signal right here at 86.84. You're out at 90, so it's about $6, $5, let's say, profit on that. Very nice profit. You're actually out of the market right now, even with an intermediate term strategy. So again, you wait for the signals to occur. When they occur, you get in. That's pretty simple. So let's go back. We'll also have this in our World Cup portfolio, which will be showing you that in just a few days. So let's look at the euro dollar against the US dollar, the euro against the US dollar rather. And this had a big move up. It's moved to a 65, so we already know that is a trading range, not necessarily a trend up. But look, I've already put the Williams percent R and also the Fibonacci retracement levels. Now look, as we look at this market, we can tell quite easily that the monthly trend is down, the weekly is down, only the daily is up. So you get the 65 reading. You've come from the lows, the bottom of the Donchian trade channel. Remember we talked about the bottom of the Donchian trade channel. When a market moves out of this level, it tends to move back and go towards the midpoint of the channel, which is right here. Now this also occurs to be a Fibonacci 50% retracement right here, this line right here, which we hit today. And this is also a 61.8 retracement at 124.45. So I would think these levels right here are going to present between here and here is going to be serious resistance, in my opinion. You also are back into an overbought condition from a very oversold condition. Remember, we talked these positions or these situations can last for longer than we expect, but this is the first real recovery we've seen, and it's all being done on hyperbole. And that's all we can say. There's nothing else that really backs this up. But the trend is your friend, and the trend continues to be down in this market. So, by the way, we'll be showing you the results of our World Cup portfolio. In the next day or two. It may be ready now. But basically, this World Cup portfolio has performed very well. And the reason I mention that is because this is one of the markets you trade in the World Cup portfolio, and that's the ETF FXE, which allows you to basically trade this market. So let's clear the screen and go to our next market. And we've got a lot to cover today. It's Friday, of course, and how these markets close on Friday is pretty important. So let's go to gold. Now, gold was up higher earlier, hit over the close to the 50 cents, within 50 cents of the 1630 resistance level, reversed back down. It's obviously higher for the week. However, moving out of the Donchian trade channel, I'll just scope this in just a little bit further, was not unlike what it did here as well. So that's, I think we'll see the market, and that pretty much was the similar level. We actually think the high there was around 1639, almost 1640, but then it came right back down to the midpoint. And I think that's what we probably will do now. Based on our trade triangles, you can see it's a pretty mixed picture. If you're an intermediate term trader, then you'd want to be long right now. But if you're a longer term trader, you'd want to be just on the sidelines. So let's go to our next market. Oh, if you're long-term trading, you're just using our monthly trade triangles, let me just say this, you'd still be short in this market. So let's just clarify that up. So let's go to copper. Copper is just moved, I know this for a fact, because I said earlier, just moved right back to its midpoint of the Donchian trade channel. It's getting overbought. Not too much to say about that. You can see this has been pretty much sideways for the last couple of months, and we'll wait for something to happen there. Silver, much the same there. It just really is kind of like moving sideways. You've got the monthly and the weekly negative. Not a good sign for the silver, but not necessarily bearish either. So you can see just since around June 24th, it's just been moving sideways. So let's go to our next market. This is the Reuters Jefferies CRB index, and that's come under a little bit of pressure. It's actually lower for the week. We closed right up here last week, and that's the we closed at 304. And we're currently trading at 299, so it is lower for the week. That's the inflation-deflation play we like to see. Again, a mixed metaphor. You got a trading range in the score, and that's the important thing to look at. Let's take a look at stocks, because that's really the big news here we've seen here in the last couple of days with the Mario Draghi's pronouncement about the going to do everything they can to back the euro. And of course, look at this market. It really hasn't gone anywhere, and I think that's the important thing to look at. You've just got this massive sort of resistance level right here. So this is resistance, and if we get over this level, it remains to be seen. But this is an area that has presented real problems for this market. Now, I wouldn't be surprised to see a similar pattern to when we had this big up like here, maybe a couple of days, and then we start going back down again. I still think this market longer term, based on our monthly trade triangles, everything's on our monthly trade triangles, because this is the trend. Remember, we talked about the trend, is still down. So again, this is something I think you really want to be and look at very carefully. So as we go into the weekend, this market's obviously closing higher for the week. Not so much higher, but certainly higher for the week. And I think it's something to look at next week. So let me just clear the screen off. And let's see what else we want to take a quick look at today. Let's take a look at the grains, because that's really what's been a really amazing thing. And this gets back to our World Cup portfolio. So here are the grains again. Now here's a good example of a weekly and a daily buy. Remember, we talked about in this market, we use our weekly right here. That's for trend, remember that. And then we use the daily right here for timing. So that would be timing to buy or exit. If it's green on the monthly, on the weekly rather, you only want to take the green triangles, daily ones, for timing. So here's one right here, and this occurred right around the 840 level. You got out around 916, somewhere like 916 right here, and you've just re-entered the market. It looks as though you re-entered at, I'll tell you exactly what level, 919.75, and that was just today. So that's something to look at. It looks like the grains have not finished on the upside. This is wheat. So let's go to our next grain. And these really have huge moves. And I'll tell you something when we get to our next market. This is corn. So again, we have not seen a signal yet in corn. We see the red is down, so you're basically out of this market for the moment. But what I do want to share with you is that this corn, wheat, and soybeans are all in the World Cup portfolio, which has done extremely well. It's made money every single year, and we've had a huge pickup with this last move in the grains for this particular quarter, which began obviously in June. So you can see when we kicked in right here to be a buy, that's the weekly, remember? And then the monthly kicked in, which is even better. And took a huge profit out of this market in the beginning, right up here, and then we got back in, and things are actually working very, very well here. So let's just clear the screen up and go to our next market. And the next market we're looking at is going to be soybeans if everything's lined up correctly. So here's the soybeans, November soybeans. Again, they are nice positive day today. It hasn't given us a daily buy signal yet. That may come next week, but that's something to look at. But we're back to 55, meaning it's a trading range. But the trend, in my mind, is the monthly and the weekly, more so weekly in the grains, but it's definitely in a positive mode from 1324. The market's at 1602, $16.02 for a bushel of soybeans. We've never seen prices like this before. So it's a historic price. Lots of profits in the World Cup portfolio in this particular market. And as a member of Market Club, you have total access to every signal in this portfolio. We post them every day. In fact, you'll see our post later today or tomorrow on the World Cup portfolio. Don't miss that. Hey, I'm Adam Hewison from Market Club. Thanks for stopping by. Every success in the market. I'll see you next week. Have a great weekend.